Welcome to the Oxen Group Nightly. My name is David Ristow. I'm the CEO, President, and founder of the Oxen Group. Please check us out on the web at www.theoxengroup.com. We're a financial analysis and investment ideas firm, and we have lots of fun stuff for you to look at for all your investment needs. In tonight's Oxen Group Nightly, we'll be talking about our Tuesday's market wrap-up. We'll also be looking at our new position in Baker Hughes as well as CSX position and their earnings. Other current positions and exits are new developments and also tomorrow's forecast as well as our disclaimer at the end of the video. Market wrap up. So we had a good day in the market. Could be pretty much expected though after yesterday's tremendous decline, and we bounced off support yesterday. We rebounded though. We did have some good earnings news out from a few companies. Steel Dynamics helped the steel sector really rally up today. Johnson & Johnson was good for consumer staples and conglomerates, and Zion was pretty good. Didn't really have a huge impact on the regionals, but again, you're seeing a lot of good earnings coming out of regionals banks, and I think it's still tough to invest in the financials right now. But that is definitely a better sector, I think, to be in than in the larger money centers. Mergers and acquisition news also helped, with Nasdaq and the ICE reinforcing their deal to buy the New York Stock Exchange for $11.3 billion. They basically told the New York Stock Exchange, we have enough money to do it, we'll do it, and if you go with us, we'll pay. If we can't do it, we'll pay all the fees and all the penalties for offering you this deal that we can't actually finance, and they say they have the money to finance it. So the New York Stock Exchange is considering the deal. Right now it looks like they want to still go with Deutsche Börse, but that is an emerging story, and it adds value to the market because basically the Nasdaq is saying, hey, we believe in the stock exchange, the New York Stock Exchange. We believe in, that's a great place for us to have more revenue, more income, and they're willing to offer more money than Deutsche Börse is, and it's very bullish for the entire market. And it's very bullish for just general stocks and in general equities. I think I've sort of taken a backseat to some traders and investors lately with options and some of your ETFs and things like that. And it's nice to see somebody still interested in equities. And then housing data came in much better than expected. So very surprised there. I was completely shocked. So what's going on with that? Well, you can see that it's really, it's actually not that great. But basically, they starts came in at 549K. They were only expected to be at 520K for the adjusted year. So basically, they're expecting 520,000 housing starts to be done this year. That was the expectations with the new numbers coming out from March. And with those numbers, they upped that to 549,000. And that's pretty good. I mean, it's definitely better than expected. It's not great. It's nothing compared to where we have been in the past. But it is good to see a little bit of a plus there, and that did help the market out somewhat, and definitely helped out the housing industry today. The market sustained gains and moved up late throughout the day. It dropped out of the gate. People taking profits, a little bit of this might be a pop and drop. Goldman Sachs, the financials continue to be weak, but a lot of other sectors and industries had a lot to rally on today. Consumer staples and conglomerates, with Johnson & Johnson doing well, steel and materials did well, with Steel Dynamics doing well, and then the housing sector did well. You had the merger and acquisition. You basically have the three things you need: the economic data, the earnings, and the merger and acquisition is three keys for bulls. Big gain of the day. I said I think we'll probably have a 50 to 60 to 70 point gain day, and look at that. We ended up about a little up on 60 on the Dow, it was a good close. It was a very strong rally throughout the rest of the day. Not a whole lot of volume on the rally, but some key sectors did have good volume coming in. And one of those sectors was the oil services industry, and this continues to be a very positive industry right now. Baker Hughes, Complete Productions, and Halliburton are just really killing it right now. We invested in Halliburton a couple days ago. Actually on Monday, sorry, just Monday, and already, after their earnings came out great. They sold it off just simply on a general market pullback, no fundamentals in that at all. It was hit it at a bottom, entered, and we were able to exit out today for 3%. Stocks already up 5% from our entry. And we saw Baker Hughes, and basically they're reporting in a week, and we said, hey, look, this stock is breaking support lines. It's got a strong rally behind it, great volume entering it, and we wanted to get involved, and it was great for us. We entered today at 71.85. We're able to close out part of the position for a little over about a 1.2% gain. It's just a quick, nice trade. We're looking for this thing to go all the way to 75 before earnings, and we'll be selling at that level. We wanted to lock in some gains today because we gotta lock in gains when we have them in this market right now. This is a very volatile market. This is a market that is trying to figure out what to do. Are we higher? Are we lower? And really, in reality, it's probably just going to be range bound for a very long time until some until we get something to really say this market can go to 14,000 or maybe even 13,000 and then go to 14,000, or this market's going to need to correct to 11,000 before it can go back up. I mean, it has to have that news or something very, very bold to make it move in one direction or the other. And for the time being, I don't think we've had anything yet. We've had things that say, oh, let's move down. We've had things that say, oh, let's move up. And it's just been kind of back and forth. It's been a seesaw. And so with that kind of market action, it's very important for us to take those gains when we get them, even if they're small, because really right now you just want to preserve your money. You want to have tight stop losses in place. You want to take gains when you get them. And you don't want to take gains early, but you definitely, like we harvest the gains on Baker Hughes, for example. We took some of the position off, but we still think this position's got more to go, so we kept some of the position on. At the same time, we're in a market that if we got bad earnings from a group of companies could drop another 100 points. So, and that could pull down Baker Hughes with it. So you want to take those gains when you have them. We locked in some gains. We really like this chart. I mean, look at the RSI is really popping up. Probably going to go to around 65 before we see that really start to top. And then the fast stochastics are just, you got great volume coming in. I mean, look at this chart. This is just a great volume coming in, and it broke through there, and there. The 20-day moving average, the 50-day moving average, and the pivot point between the price channels. 75.10 looks like a great target. It's a top here. We'll look for the stock to move there before earnings, which come out next week. We also we've been in and out of CSX a lot, taking some gains here, taking a couple losses here. Been trying to get this one the right timing on it, and we held this a little bit. We got a little bit of a gain today on it. Held a little bit into earnings. I mean, this is a stock that has rallied 18% since the beginning of the year, like some 40% since over the last year. It's just been a really great stock as transports have really done well. But it's definitely had a pullback, and it's sort of gotten support here around the 75 level, and we've been trading it around on that level. And we held it half of the position, our original position, into earnings, and they beat expectations. The 1.06 earnings per share versus the 1.04 beat revenue by about 100 million, and yeah, so they have pretty good earnings. There wasn't any guidance in the earnings, but they do have the earnings call tomorrow morning, so we'll see if we get a little more guidance off that call. But they did expect to maintain an operating margin at around 65 to 70%, which is just great. They're seeing every single kind of sector, every single part of their business is doing well. It's a really great report. Just I think a lot of that's baked into the numbers, obviously, but at the same time, with this earnings report, this price to earnings ratio is dropping drastically. It's improving by, I think, about it was kind of 0.76 to 1.06, so there's 30 points right there, and the improvement, and that's going to really drop your price to earnings ratio, and the stock definitely is going to move to the upside from here. Was down a little bit in after hours, but again, you cannot really trust the after hours trading. That's people taking profits, people just not sure what the stock's going to do, but I think we're going to see it rally from this point. So we talked about the Halliburton position. We're holding a position at Fifth Third Bank. It's been very weak so far, but we're still looking for that to rally into and out of earnings. We're expecting a lot from them, and we haven't been adding a ton of positions lately, but I think it's important for us to slowly add positions. We had a real tough week last week, and I think everyone in the market did, and it's going to take us a little bit of time to get that confidence back in this market. We want to see a couple days put together where we're going to the green, where we're actually rallying around things. We've had good earnings come across the plate, and we've seen the market sell them off, or we've had some bullish news and the market not really be affected by it. And so it's been a pullback for sure. We've been in a pullback mode. I think we've bottomed a little bit here. We've got a little bit of upside, definitely potential. There's a lot of bargains out there right now. And as we continue to see some good earnings come through, it's definitely going to present some opportunities for us. And as we did with Halliburton, and then Baker Hughes is presenting that opportunity from the Halliburton earnings, and basically saying oil services companies are just really hitting home runs right now. We've had a lot of new developments on the site. Definitely, if you haven't been on the site or a while, or you haven't been to our site before, we just launched the extended value portfolio a couple weeks ago. We started a long-term ratings portfolio in December, and this is basically in addition to that. It's powered by our equity analytics. We also had a new trader, Giorgio Ferreira. He's on with us now, and so we're having trading ideas coming out from him, and those will be integrated into our Oxen Group nightly as well. And some of his recent positions have been buying automatic data processing, Essex Realty. He shorted Goldman today, and he bought El Paso Core. So those are some new things. And we also just launched auto trading. So now basically you can trade right with us with the Oxen Group and not have to touch anything. And it's all on our site. Check it out. You can basically just trade with us, our positions. You won't have to do anything. We use a service that's going to be able to access your account, and it's really great. Tomorrow's forecast. We had really great earnings in after hours from a number of tech companies. IBM's earnings were very good. The reaction to it was positive then negative, and it's kind of been seesawing back and forth. But Intel, really great earnings. Yahoo is getting some nice buying action in after hours, and Juniper Networks, good earnings also, good action in after hours. We also have important earnings tomorrow coming from Abbott Labs, AT&T, Wells Fargo, United Nationals tomorrow morning, United Tech is tomorrow morning. Existing home sales are tomorrow morning. Crude inventories, a lot of stuff's going on, but tech's really strong earnings is going to be very, very good for the NASDAQ, and that could also be very good for this New York Stock Exchange as well. That's all for today. Visit us at www.theoxengroup.com. Email us at contact@theoxengroup.com. Hey, be a part of our 70% accuracy.